Hello guys, glad to have you on board again. Today we're trying to do in a few intraday trades, but let's be honest, I'll go straight to the conclusion. There is nothing to do today, but I'm gonna give you the arguments that comes along with it. So first of all, for the crypto folks, there's nothing else to say in here as well. We're just waiting for something reliable to happen, some kind of a trend candle to show up. As for now, we've got nothing close to this, so I would just say wait for something to talk about and let the DOMs talk in between. Odds are still to the upside to me, but it's hard to say any more than that. I mean, the candles are not doing anything, so until we manage to have some direction in prices, it all remains highly speculative. So I remain bullish for now because I think that's what the most rational is, but that doesn't mean it's necessarily going to win by now or by tomorrow. All I can tell is that volatility is crushing. Momentum is nearly at zero, but the latest time we had some momentum, it's been exploiting to the upside, so therefore I still have a tiny but steadily bullish bias in this context. Still the same cluster to me, decision cluster, which many structures are heading toward to, which is the $200 area, with a price cluster, time cluster near the end of the month. So normally I think we should get there by this time scale. Many things will try to push us toward this area. God, no, I don't know. I mean, it's just a speculative thing and feeling. I think this area, no matter how long it takes for us to lateralize, I think staying in this area with volume dropping, which is really important. I mean, we've been executing a shit ton of volume from those areas, and now the volume is dropping, which is a pretty good sign. It means volatility is dropping as well as prices. And back then, prices were significantly bearish as the volume were still dropping. So in those areas, it was possible to start speculating as the volume started to drop. The prices tended to do as well. But now if you compare what I thought back then to be the potential desert crossing phase compared to what we're experiencing right now, you may see how freaking different this is. So really, that was far more volatile than what we're experiencing right now. So now that we see this, trading back then just was worthless because it definitely wasn't the desert crossing phase. But it was hard to figure out by now. So I would say no problem trading this area, no problem trading this one as well. But now that we see this, we can definitely feel what the desert crossing phase is. So we're desert crossing, and normally we should wake up out of this area for a reason, and once again we don't give a shit about the reasons, but normally it's supposed to wake up to the upside. If we go down, normally it could be only short term, which means we could just go there to trigger some stop loss to whoever is stupid enough to put one in the market books, but that's how it is. So I don't change anything to my Ethereums or Bitcoins or any cryptocurrency scenario. I still wait for something to happen. I know it's hard to wait, but let's do it. I mean, that you're going to probably be taught the first and most important lesson in trading. You don't ever, you're never ever going to anticipate timing. And moreover, when it's about just fucking up the timing, which is definitely the goal of desert crossing phase, just crushing any sense of volatility, any sense of intraday trading, any sense of speculation. We're just here to destroy all those feelings so that long-term buyers will restore their power. It's simple as that. So long-term speculators in here don't even give a shit about the short-term volatility, even if that means price may drop below 60. That's possible, but even if that happens, who gives a shit? The short-term traders will probably give a shit, but the long-term traders will not even move. So if you're a buy and holder, even going to 60 isn't important to you. Just let it fucking go. The market is dead. The speculators are getting out. That's great. That's what we want them to do. Now moving to the conventional market, trying to normally do some intraday trades today, but I'm going to jump right to the conclusion. There is not a damn thing to do. I just recorded a swing video instead for you on the SPX heading into the Fed, so educational video in which I've just been reviewing all my trades, recent trades on the SPX. I strongly invite you guys to have a look at this. It's right in TradingView. You will easily find it. It just shows you how I've been managing, being totally wrong for the latest 2 months. I mean, I basically started selling the SPX in here, all right? This one has been obviously taken out since then, but the thing is that I've been trading here, I've been trading in here, I've been trading in here, and I'm always still going to be selling, and I'm going to be selling one last time in here. That doesn't mean I've been holding the previous trades. Most of them have been loss taken, which means it's been pure loss as the market hasn't been given a single consolidation, which means when it happens like that, I don't want to be buying such market. We've left so many gaps purely opened. We basically trapped a shit ton of sellers, and normally we're going to pull back to offer them an exit. So I think that this market will start deteriorate, but still we'll have a positive news flow coming along the way. But this is when I think things will start to look out ugly. So the thing is that we might have some positive news to come in the next few weeks and months, but we might have bearish prices, and this might just drive people as crazy as they could be. Just like right now, we got just bad news and the prices are rising. So it's just anybody who's trying to making sense out of the current prices just gonna be wrong-footed and wrong-footed hard. I think the timing right now is just to fuck up people who think, and to just purely volatile trading. See how high we can go, how high the latest dumb guy is ready to pay for something that really worth nothing but half the price. And we'll try to go as low as we can when things will get dirty. So I'm switching my current perspective, reminding you guys that when I was trading all those prices, when we were still below that resistance, I never even thought we would be able to cross. But we did. I mean, right now it's down the prices. I cannot lie to myself. We've done that. I wasn't nearly anticipating this to be possible, to be happening, to be highly probable. So it's probably the least probable scenario that's been happening to me, that's been playing its game, and without a single breathing, which is the most dangerous stuff, because like I said, we've been trapping and gapping, which is even more dangerous because that generally acts like a magnet. And whenever we will pull back, we'll have a lot of things to pull back for. Regarding all the areas that I've been trading, we have a strong demand in here, which means if we start failing and if we start getting closer to the price, this price will start attracting like a magnet. So the problem is we've been rising, but we've been rising definitely the wrong way, which will probably push us back to median prices. What I'm trading right now, back then, so back then was this, all right? Sorry, not this, just this. All right, I was trading a new low with an 1, 2, 3, 4, 5 perspective, in which first wave is the shortest, second wave is longer and extending the first one, and the third wave will extend the first one, and we will have targeted the 2200 area in that perspective. Now it's totally different because for one reason, this scenario isn't possible anymore because that structure doesn't authorize price to break this high. Now we've done. So what is this and how do we trade that if we were about to reverse with the Fed? Then the structure is far different. It means we will have two sets of waves to the downside inside a trend channel, and if we reverse out of this trend channel, oh my God. Then this is where the worst part starts to play. Because if that's what's about to come, then it's another set of two waves, and it's basically what we call an ABC, flat correction, and ABC extension. And generally, in that perspective, we're doing 168% of the previous wave, which means it's not going to be pretty. All right, in that perspective, we do 168, and that's just the best case scenario, because I think if we go there, we're probably going to extend to one more step, which is probably 200, and we're probably going to break down the 1800. So I was forecasting that we're rarely or very hardly going to break through those levels, and now I think we will, and I think we will pretty fucking easily. Because if we do reverse out of this trend channel, we're probably going to double it down. I mean, it's going to be a bearish range setting itself in here, but pretty fucking dangerous bearish range. But though, it will just be two sets of waves, which normally means the first one is in here, and everybody thinks it's done. We reverse, back to 50% of this initial trend channel, in this area we search for a new bearish entry. So anytime we slip on top of the 50% of this channel, selling is going to be necessary. But I think the worst will be coming right after, which means people will think we're done in here. They will forecast prices to do this. So in here you can expect some sideways action, some nasty, nasty crashing volatility. But the thing is that at this point, everybody will think we'll do this and trend. That will have done an ABC correction and that we're good to go for historical highs. No goddamn shit. This is where I'm going to be freaking leverage selling in here. So brace yourself. If we reverse in here, you know what I'm going to be doing. You know what I'm going to be thinking in that area. Everybody will be bullish. Obviously in here is where you need to be freaking bearish. This is where we're going to trap all the bulls. And if we do, even if we do have good news in here, or let's say balanced news, in here it's definitely going to be to the downside. The market is about to choose in here. In here we got two options. Either we do this and we try to gain some time and buy ourselves some time. Third option is definitely a bubble, but I don't really even think it's possible. Very far less probable. So let's not even think about that. It's possible, obviously, always, everything is always possible, but I don't really think we can do such thing. So option number one, we try to get some times and we create some bubbles in the visas, Teslas. What the hell, Microsoft's. So all the bubbles we have right now still activated, trying to reach out to historical highs and trying to see how high they can go. All those values just surge to the upside, but the rest of the market doesn't follow through. I mean, the small caps are pretty fucking lagging right now, which is not a good sign. But everything like that, all right? We could have a very splitted market. The high-ranking names, those who make the gains, and the rest of the indices just lagging behind, but even switching bearish market. So this is one option. I don't favor this one, but it could happen. If it happens, I'm going to be out, and I'm just going to do nothing for a few quarters before selling back again later on. That's an option. That's the second option. But if we go for this one, it simply means we're going to destroy risk-taking structure. Remember what I said to you about the VIX. The problem is, to me, the VIX is heading toward freaking dangerous time. Heading into probably May to be heavily dangerous. So we could have a first spike in May. And if we do have this spike, I think the market will never recover from this. I think it's just going to be a pullback, violent pullback and volatility, but now and right after it's going to be the worst case scenario. It means afterwards we're probably going to have another set of drops during July in which probably the market will just surrender. Something similar to this. Because it happened in the past. I mean, you may think it's not valuable, it's not worth enough, but this is exactly what happened back then. All right? Trend channel, pullbacking to 50%, and then end of the world. You'll be stunned to see this. I mean, you would say, no, it's not possible. Phil's probably wrong once again. It's just bullshitting. All right, now let's see how it done back then, and you'll see how similar the pattern is. Oh, does that sound like something you've ever experienced? It's exactly what I think is going to happen. Going down to the trend channel, 50% rejection, and end of the fucking world right after. And what do we do generally? We do downside the trend channel. All right, I told you I'm trying to contextualize this market. I've been trying hard, and the point in which we reverse is absolutely essential to figure out the context we will be trading for that bear market. All right, I thought we were doing something constructed, something logical, something like a gray rhino structure. It definitely isn't a gray rhino. What we're doing here is dead cat bounce. So dead cat bounce, reverse in a particular space, in a particular way, and I think this way is this. Building a trend channel, fucking up the trend channel, and then destroying everything. It means the prices I'm going to buy is probably the prices that will slip below the extension of this channel. So I'm not going to buy anything until 1600. So previously I said I will be probably searching at buying this market in here. No longer going to be the case. I'm just going to be a fucking seller in here, and I'm going to be selling hard, which means now I'm forecasting the market to crush. Not crashing, because I don't really think it is, but I think in here we're going to have a shit tons of black swans, bad news, and the market will just fall like a knife. Like vertical. it's exactly the 2008, so I think bubbles and credit bubbles will burst in that perspective when we'll break through the trend channel. All right, so for now we're holding the grounds, which means it's not the moment I'm going to take a shit ton of gains. I'm just building for my gains and risk managing therefore. So what current stage are we on? This one. Is this looking like it was back then? No, but the structure still remains the same. We're building a trend channel, a bearish trend channel, no matter what people think. Even if the structures we've done looks more like this is what we've done, okay? No, let me just, all right, we've done this, or it was parabolic, or parabolic. First drop, then we triangulate, all right? Then we slip through historical highs, then we've done bam, all right? And now we've did this. But does it really changes anything to this? We've done the exact same thing back then, pulling back the support, breaking the support, pulling back to the trend channel built by these lows. Okay, we've just done lows to highs, pulling back to that trend channel, reversing in here, as probably back then everybody will think we will go high. We didn't. We started to fall, pulled back to 50%, and then fucked it up entirely. That's exactly what I think is coming along the way. So, am I bearish? More than ever. What am I looking for? Just for the market to prove me right. If the market proves me wrong, I'm going to be out, because after this scenario, I've got nothing to forecast, but I don't know. All right? And when I don't know, I don't trade. For now, I still have this final scenario to play. If it doesn't work out, and if that or that is about to come, I'm not going to be a seller. Obviously, I'm going to be out. I'll be wrong. I know some people will like to see me wrong. I don't really give a damn. I already gave you the numbers. If I'm wrong, I'm probably going to take a 15 to 20% loss. There's already 4% out, because I've been stopped on Visa and Microsoft. And it's going to be an additional 5 to 6% if I get stopped in the SPX. So some things have been working on the opposite way. I mean, Tesla is working just fine, so I'm having shit tons of gains in Tesla. So it's not all wrong. Facebook is doing great as well. I mean, all those stuff are working just fine. But some things may not work. And if the SPX doesn't work because Microsoft and Visas and things like that heading to historical highs will just keep on surging into nasty bubbles, if this happens, it's possible. I'll just be wrong. And it may happen. All right, I'm just trying to put a context to this market, and if it doesn't work, then that's how it is. All right, so that's it for SPX. Therefore, we've got the Fed tomorrow. It's definitely going to be the game changer, the one that will highlight and decide about this technical cluster, very dense area that we're going to trade out of the 2850, which is definitely the highest price I was ready to speculate on. I was clear about that since then. Even when I took those trades, my stop losses, even back then, were in here. We're now as close as ever. I never thought we would go that high. I never imagined this to be possible, but here we are. So, does that mean I'm wrong? Not yet. Does that mean I can be wrong? Obviously. Does that mean I think I'm going to be right? Yes. Otherwise, I wouldn't even have a trade open in that market. What am I doing instead? I'm just risk managing. Am I looking at selling entries? Definitely yes. Am I going to sell today? Probably yes. Have I sold yesterday? Yes, but it didn't work out. So let's be honest, what have I been trading yesterday? I've been trading this 4-hour signal because that's exactly what the strategy tells me to do. We were in context. I told you I was looking for 4-hour signal, and we just got one. With candle closers, I got everything I needed to sell, but the market decided it otherwise. So yesterday it was all fine all day long until 15 minutes by the candle close. When we were there, I was bearish. I sold right in here at the morning. I sold, partially profit took, paid for my stop loss. I reinforced in here, right in here. All right, put in my stop loss in here, reinvested the gains. All right, and then nasty candle close. I don't know what has been triggering this, but it was stunning to see this in real time. The market was hesitating. I clearly thought the market would do this. But instead, not even the news, nothing, the market just surged to the upside. So the market just invalidated my signal, pulled me out of my 4-hour signal yesterday, even though in a technical perspective, it's definitely the kind of signal you need to trade eyes closed. I did, it didn't work out, which means the market isn't trading technicals. What do? We're trading the Fed. This is what happens. We're trading psychology. So let it be, all right? I've been invalidated 4 hours yesterday. I'm not even trading until I got a daily signal right now. But I'm still trading bearish, which means we're not even making sense in this market in a 4-hour perspective. So why do we do, what will make sense in here? Just the Fed. We're just going to try rising like crazy hell shit until then, and then something will probably go wrong. That's what I think. If nothing goes wrong, if everything goes according to the plan, and the bulls are surging, no limits, I'll be wrong. That's as simple as that. So how do we do intraday trades in that context? We don't. We simply don't. I mean, we're fucking up 4-hour signals like there were nothing. So I suggest we just do nothing in between. So intraday trades, I'm sorry guys, there's nothing to do. It's just because what we're doing right now just makes any sense to me. It's psychological patterns, short-term traders doing whatever the fuck they do. I don't see anything to buy in here. Those trends are overextended. You don't buy late-stage trends, you just try to sell them. So as a speculator, there's only one thing you can do, trying to sell, but the market doesn't want to. So what do? You risk manage. If you were too aggressive, you're going to be proven wrong, even if that means you'll be right in the end, which is the worst case scenario. So don't pile up selling entries. Just do it right. Do it patiently and with risk management. Only those who will do it well will take the gain in the end, if there is such a gain. But the worst, like I said, is if the market collapses after the Fed and just took your stop loss right before. That's the worst fucking case scenario. You must not let that happen. All right? So now, what is the limitation in here? I think in here, you shouldn't let yourself slip below those, on top of those prices. For a reason, simply, I've said that in the Trading Views video. So this is the highest price we've been down to previously in here in 2018, early 2018. This is where back then the context was, like the one we have right now, just out of the ground, nothing rational. We're just as high as we could be, even though there was nothing rationally forecasting this to be playing like that. Now we have bearish news, which means back then everything was great, but it's just, it wasn't that great, all right? It was good, but it wasn't that great. Now we're balanced, and it's worse. I mean, we're trading the same prices, which is really stunning. I never even thought we would ever trade those prices again. When we were there, it made no fucking sense. Remember what I said back then? I said, if we pull back to 2018 open, I'll sell. Eyes closed, because I would think those prices were too good to let it go. Look how high we are right now. And do you really think something has changed in between? Absolutely not a damn thing. So we're here. I don't know why. I don't even try to figure out why. All I can tell is that if we rise on top of those ashes and go historical highs, oh my fucking God, I will have never ever seen such thing in my 8 to 10 years career. Never, ever. It means it's possible, but it makes absolutely no sense. I will be crazy laughing if it happens. I'll give away my gain. I'll give away my losses. You can be damn sure about that. I'm not going to fight with such kind of market. But, oh my God, if the bulls can do this, oh yes, I'll say clap, clap, clap. That's the biggest ever all-in terms of psychological patterns I would have ever seen. I may have to suffer the loss if this works out, but oh shit, Sherlock, it really is like I've got the worst poker player in front of me just all-inning with a poor hand. So if it works on my option, I know a shit ton of money is down the corner, but if it doesn't work out, I don't want to risk it all. So it's really just like that, all right? I feel like a poker player who sees a freaking huge opportunity that I doesn't want to miss, but I don't know. I mean, I never know what the cards are in the opposite end, so I just need to risk manage. I want to take that gain, let's be honest. That's why I'm selling the SPX. I want to be in this because I think a recession is down the road, but I still don't know. So the next move is going to definitely prove me right or wrong in the forthcoming weeks. I think the decision cluster is in here. It's not about time to switch to aggressively freaking over trading. Just be patient, wait for the Fed, wait for a couple days to trade afterwards eventually. I just don't want a candle close on top of 28.73. If we do have that, I'm out. First invalidation level is going to be daily candle closes with the cash market on top of 28.50. If we do this, that's the first bad sign. It means if we do this, I'm going to start getting out on pullbacks. I mean, lowering my leverage, but I'll still be selling, all right? But I'll start figuring out that I'm going to be wrong, all right? That doesn't mean I will, and we could probably just be there in a few days. But all I care about is for the weekly chart to don't rise like that. What I think is going to happen is an evening star in here. I think we're just going to doji candle in here, probably going to try rising with the Fed. The Fed will probably disappoint, which means we're probably going to turn negative for the week, closing at the equilibrium price, and then next week is going to be the decision maker. That's exactly what I think is going to happen. I think we're not even nearly going to trend today. I think we're just going to try getting to this area, reversing with the Fed, digesting for the rest of the week, and next week is going to be the game changer. Either next week is bullish after the Fed, and I'm going to be heading towards stop loss, or the next week is bearish. That's an evening star, and that's not going to be pretty, which means the bearish signal we're having here would have been overcome just for an evening star pattern to trigger some dumb trader stop losses in here and just reverse. So be aware that doji candle in here in that structure can be significantly volatile. The context is ready for it. The Fed is absolutely what the market needs to be volatile, but I think any fucking way the outcome remains the same. I think this weekly signal in here is the one that needed to be traded with a decent risk management. All right. So no intraday trades in between, I'm sorry, but I thought I had to talk about this scenario in greater details. Other things I'm watching closely right now is the AUDNZD, because I think this one is mature enough to buy right now. We've got the bullish engulfing structure on the way for the weekly chart, so I hope this is finally the fucking end for this. So I'm buying pullbacks on AUDNZD right now on an intraday perspective, and I'm damn hoping that we're going to close the week at the highs, having this beautiful structures finally and fucking yes validated to be traded for some strong and long-term reversals. If this happens, it's going to be something like that. We're going to probably surge for a few weeks down the road, and we'll see absolutely no resistance but getting to 107. Probably first profit taking is going to be in this area for me. I mean, profit taking doesn't mean I'm going to get out. It just means I'm going to partially lock on the gains, probably just a 15 to 20% profit taking in here, no more than that, just to buy out pullbacks if they occur. All right, so that's pretty much it. Tesla obviously validates the breakdown, so we're just falling. All right, this thing is just waiting for a crash down, so we're now at the trend channel, pullbacking on the context. So it's definitely the worst case scenario for Tesla that's showing up. They've been unveiling everything they could have unveiled. We're squeezing in here, so the squeeze could be to the upside. If it is, then I'll be surprised it is, and in that perspective, that's a stop loss to me, but the stop loss cost me $0 fucking dollar, and to be honest, in here I already have I've sold a gain yesterday. Let's just percentage this. I am, how much does that make? I'm 5% gain out of current Tesla trade. Okay, so 5% in the table with leverage 2. No, with leverage 1.25. So 1.25, which means everything that falls in Tesla brings me 1.25 the amount. So I think Tesla is going there. So you can say, oh great, if Tesla works out, I'm going to get a pretty nice gain. So if Tesla works out, great, it's going to pay for everything I've been risking in the US trade. So even if I'm wrong with all the other assets, if Apple goes historical highs, if Facebook reverses, if Google goes historical highs, if all those things are bullish trading, if just Teslas fall apart, I'm going to be in money. It's simple as that. That's all I care about. That's what we call risk managing. I don't give a shit about right or wrong. All I care is that something may work in this process. If just Tesla works, I'm fine. If everything just doesn't work, and it's possible but very less likely, then this is where I'm going to take that 20% loss I've been talking about. And it could very well happen. All right? But like I said, even if I do take the 20% loss, losing the SPX, the Dow Jones, the Hang Seng, the Shanghai Composite, the Nikkei, if I get to lose all my trades on here, just Tesla will pay for them. Pure and simple. All right, that's what we call risk manage, portfolio trading. This is exactly how it is. You spread the risk and you hope for something to just work fine. And when it does, you double down on it. Did I hesitate to trade this Tesla bearish? No, I told you every reinforcement the latest few days. I'm definitely going to take an additional reinforcements whenever we'll head down to those supports. We've managed to do the first step I wanted, closing below 275. Now it's done with a candle close. I think it's about time for Tesla to fall apart. All right, that being said, I'm going to stop in here, guys. So wait for intraday trades. Definitely not the timing to do such thing. I'm probably going to take a WTI trade in the meantime as well. We're heading to what the very interesting cluster I want to be into. So patiently waiting for this to play its game. We're very low volume trading in here. That's definitely going to be volatile as well. So expect the WTI to be volatile, maybe because of the dollar, maybe of God knows what reason. All I think is that we need to sell this as well as selling the equities market, especially the US ones. We're definitely ending a bullish cycle in here. We're still pretty fucking interestingly bearish below resistances in a low volume area. If it reverses in here, it's a new low that comes along the way. If it doesn't reverse here, that's a stop loss. But once again, risk managing, not forecasting the future. All I can tell is that if we reverse in here, the gain is enormous, the risk is limited. It can just be the risk. If the market takes my risk, no problem with that. It will bring me the gain anytime you repeat this cycle. All right, can be wrong on the WTI, but on the same context, if you do take the trade on other assets, you'll have more gains than losses. That's just it. That's a speculation. But if you put your efforts into single trades instead, that's just where you're going to be wrong applying a speculative strategy. You don't go personal with the tradings. All right, I'm not going personal with the WTI. I don't give a shit if this goes to 25 or 40 or 70. All I care is this in a context? Is this in a speculative context? And if it is, can I take the trade? I've been clear with you guys since yesterday. The 4-hour signal in here, no signal. Therefore, no trade. Now, what did we do in between? Diverging, which means now I have something to trade. Now we're heading to the Fibonacci, we're heading to overcoming this context. Do you think I'm going to trade in here? The answer is freaking fucking yes. We do have a target in here. Everything suggests WTI is going to try trading this area. I'm going to probably sell out of it. I need a few stuff. Remember, the range tradings requires conditions. Condition is to reach out to the context. So I think there is still some upside to do on the WTI. I'm going to be waiting for a freaking fucking triangle. So anytime I've got a triangle, I'll be trading. I need a signal, which means if there is a signal, it's great. If I don't have signals, what I'll be looking at is a momentum divergence. So as long as we do have lower highs in the RSI in here, I'll take this trade. Is that complicated? Is that subjective trading? I don't think it is. It's just rational and undoubtful. You know the conditions I'm going to be using to trade. Just, I'm waiting. That's my job. My job is most likely waiting and identifying context. That's what I'm trying to teach you guys to do, to fully identify the context. Know what you do, heading to what target, because the context is this or this or this. If this trade triggers, you know how I'm going to be managing this. This is validation, which means this is where I risk manage. When we pull back to the trend channel, 50% is where I consider the trade confirmed. All right. And eventually here is where I'll start locking on the gains partially. All right. But as this is a bearish range, I think I'll forecasting a target below the previous low. I'll take that trade, I'll manage my risk for a potential pullbacks to reinforce, but my final target is breaking this low. All right? Simple as that, because the context tells me to do so. It's a range, it's a bearish range, a wave for kind of breaks. Okay, this is clearly kind of a wave, extended wave. I forecast another set of waves coming along the way. I could be wrong, could be right. All I care is that in this cluster, it's interesting to speculate. All right? Something is going to be decided in here. I don't know what the outcome will be. It could be this. If that's it, no worries. I mean, it's nothing personal. You really have to figure this out. All right? You don't go emotional with the oil. You don't go personal with the oil. All you do is just figuring that something is going to play in here. As long as you got the signals to limit the risk, you just take the trade. And out of 100 trades in the same context with the same signals, you're always going to bring more gains than losses. But if you get yourself too emotional with a single context, then this is where things doesn't play out. This is where you're not speculating. This is where you're guessing. This is where you're betting instead of trading. So please listen for this. I see among the messages I receive, among the feedbacks I have from some users, that some people are getting over emotional about the oil. Some people are getting over emotional about the US sector trades. The thing is that I'm not. You're here to learn how I do my job. So learn what the difference is between you and me. In here, if you were getting over personal with those scenarios, I'm sorry, but you're doing a mistake. I'm talking a lot about those signals, not because I care more about them. It's just because these are the way I think, these are the sectors in which I think the educational content is the most important for you, because this is where I think you're going to learn the hardest lessons, how to risk fucking manage when something goes wrong. If I'm talking to you about the SPX so much, it's not because I care, it's because I think there is hard lessons for you to get out of this. It's pure and simple this. I'm not doing those shows for me. I don't give a shit. I mean, I know how to trade. I'm here to teach you how to do so. And that's the thing. Really get it that way, because I think some of you guys just get it the opposite way. You're thinking that if I do talk about that, it's because I care, so should you. It's nothing but that. It's nothing like that. It's quite the opposite. I care because I think you have something to learn out of here. Anyway, that being said, it's way too long already. I wish you guys a good day. Don't take any trades ahead of the Fed. The market has a strong decision to make. God knows what the answer will be. But to me, odds are still to the downside for petroleum, for the dollar, and for equities as well. I think now we're going to have bearish equities and bearish dollar in the same time. But for now, the market is just proving me wrong. So I'm not fighting it. If it's going to be a negative outcome, then here it's going to be, and that's how it's going to be. I'm not going to fight that. But I think all the early signals I have suggesting the bears are placing some bets in here, and I want to be definitely among them. If I'm wrong, I'm wrong.